Hello, our American Patriot friends, our American Patriot ladies and gentlemen. How are you today? Today is all about Oklahoma mortgages, all about Oklahoma mortgages FAQ. Put them in the comments as we're going through today's part two of last week's part one of things to know when buying investment properties on the mortgage loan side and the real estate side in the Oklahoma City metro area. Want to say shout out to our guest, Tom Rosser, who's always on here every week dealing with my pain in the butt self and putting up with me and also answering your Oklahoma mortgage loan questions. Tom, how was your last week? What was a big win last week?
Big win last week. My oldest turned in all of her assignments, got to have a fun weekend with their buddies. Grades are where they need to be. That's a big win for me. A big win at work. It just feels like we're taking good care of people. It's a good feeling at work right now.
Do you feel like the phone calls are picking up on the loan side of things?
So I feel like phone calls are kind of up and down, but it just feels like our service people are happy with us. I had a closing today with a new construction, and the people were really, really happy.
Oh man, and new construction, man, those could be some headaches. Did they run into any of that per diem pain that sometimes people run into?
No, we got it done on time. No per diem extras. Yeah, and they were really happy with the house and the builder, and it just
That's amazing.
Happy with us. They said they're going to miss our phone calls. That's always good to hear.
Well, you got them on your follow-up. It's not like they're not ever going to hear from you again. I get your how to bake a cake postcards once a quarter. Like they're going to hear from you.
They will. We try and stay in front of people.
If I was a baker, I would attempt to do that. But you can send me a postcard on how to build a Lego smiley face, and I'm so lazy I probably wouldn't do that. But I love it. I love seeing you every quarter.
Well, I love to eat the cake, so if you make them,
I'll order it and have it DoorDash to you.
Yeah, I'm in.
Well, Tom, investment property financing. Let's go on to number 6. If you don't have anything you want to put out there, mortgage news related right away.
Mortgage news related, some positive changes. We've removed some of the extra guidelines that we got into during the pandemic. I heard that this morning on a call with our underwriters. So it's hopefully loosening up, or I don't know if loosening up is the right word. Maybe getting back to where we were.
Man, Tom, I know the last house we bought with you guys, you said that there was a lot of stuff that I had to turn in and stuff, but it just always seems like I got to turn in a lot of stuff anyway. So if there's less stuff I've got to turn in, that's going to be nice because I just hit forward and then I forward emails where you need me to forward them to, but I know that customers always have a little bit of a chip on their shoulders about doing that, but you're asking for a lot of money. So it's just part of the process.
Yeah. It's going to still be a lot of stuff. It's just a little bit less.
Nice.
Yeah.
Nice. Well, guys, when it comes to tax implications in investment properties, I really can't speak to this, Tom. I don't know. I don't do my own taxes. I don't know anything about that. On the mortgage loan side of things with investment properties and tax implications, what do you know as a mortgage lender?
I am not a CPA, right? So I'll say the same things up there, right? All the compliance stuff that contact your CPA. I'm not licensed to give you advice on any of this stuff. But there's some good tax benefits to owning investment properties as far as the interest deductions that you get for mortgage interest deductions. There are caps on how much you get to deduct on your mortgage interest, but that is a good deduction. There are also some tax savings as far as a 1031 exchange when you sell investment properties that you own and you invest that money in a like property. There's some good tax advantages to owning real estate.
That's a good point that you bring up because I do get the First Exchange Companies webinars once a month about the 1031 exchange and deferment of the tax payments. From my limited understanding, like Tom said, you got to be a CPA and an IRS person and all this stuff to verify. But basically, they're taking that money and deferring the taxes literally until they die, and then when they die, the trust or the beneficiaries of it have a reset tax value. So essentially, from what First American Trusted Titles told me, and correct me if I'm wrong, Tom, you're basically just never going to pay capital gains taxes on that asset because you keep deferring it into the next asset. Is that kind of what you were talking about?
That's what I'm talking about. Yes.
Thank you for refreshing my memory on that. I watch a lot of webinars because YouTube is my virtual friend, so I completely forgot about that. Number 7, Tom. What do you think the risks and benefits are on the mortgage side of things when it comes to investment in real estate? Are there risks and benefits on the mortgage side of things when it comes to risk and benefits of investing in real estate? Sorry. It's been a
Um,
long day. I'm so sorry, Tom.
no, you're good. I think the risk are the same as any other investment, right? You invest and you buy some Walmart stock, and Walmart files bankruptcy and closes its doors. You made a bad investment. You lose your money. If Walmart keeps growing and keeps making revenue and profiting, and they share that profit with you, and your share balance goes up, you made a good investment. I think you can have risk in real estate as well, right? You could buy um, a property that doesn't appreciate the way you want it to, or that doesn't rent out the way that you want it to, or hopefully you're working with Josh, right? And that doesn't happen. He won't let you buy a property like that. Um, but no, I think there's risk in any investment, and there's absolutely risk in real estate investment.
Real estate side of things of investing in real estate, risk is just make sure you got a good insurance policy. I mean, if you got a good insurance policy, your risk against loss is going to be covered.
Right.
The biggest thing here in Oklahoma is make sure you have full replacement roof coverage on your investment properties, unless you're doing self-insure. If you're doing self-insure, then insurance doesn't matter and risk of loss doesn't matter to you if you're doing self-insure. But even if you're doing self-insure, you might want to look at just a dwelling package. I'm not an insurance agent. I don't play one on TV. But just dwelling coverage, if it's an inexpensive annual expense, like dwelling coverage, let's say it's just $1,000 on a $150,000 house, totally making it up. But you're insuring that $150,000 asset for 185,000 or maybe even 200,000, but you're just getting dwelling, and a fire happens or a tornado comes across, you just made a 33% return on your investment. So, risk for investment properties like that, and the tenant that you put in your investment property is going to be huge. That tenant can make or break you, especially if you're running on super low margins or this is your first investment property. But with all things, you've just got to get started. But making sure that tenant is good on paper and good in person for your property. If you're buying Class C properties, it's a Class C property. But if you're buying a Class A property, you got to make sure that the tenant is going to treat it like a Class A property. So the biggest risks with investment properties are the tenant, maintenance, and of course natural disasters that we have here in Oklahoma. What do you think about that, Tom, on the real estate side of things? Does that sound good, bad? Does it sound fair?
No, that sounds fair to me. And then, you asked about the benefits as well, right? All the good that can come from it, where you're paying off an investment, you're leveraging capital, you're making money.
Oh yeah, they're leveraging capital. They're only putting 20% down, and they have 100% of the assets value, 100% of the assets appreciation. They've got a lot going for them. Yeah, the benefits is it's a hard asset. It's a hard asset. It's not like Tom was talking about earlier with Walmart stock. It's not a paper investment. It's a hard asset. So no matter what, you'll always have that physical asset when it comes to real estate. Number 8, Tom. This one you might know a thing or two about. What do you think the best way to finance an investment property is? What types of financing are available?
I think it depends on your long-term plan and your goal, where you want to be down the road. If you want to buy, 1 to 10 of residential properties, I'm your guy, right? You want to finance it with a long-term mortgage, in my opinion. There's other ways to do it. If you want to flip homes, I'm probably not your best resource. If you want to um, just maybe not long-term own these properties, there's other ways to do it. But financing through me, which is a residential mortgage company, a residential mortgage loan officer, is a great way. The other way, that I would think of would be a commercial bank.
And you said 1 to 10 properties, Tom. Tell us a little bit more about what that means. 1 to 10 properties. How does Gateway Mortgage help them?
Well, so I securitize loans on the secondary market, and I've got to play in the sandbox that they give me, and I'm capped at 10 finance properties per individual.
Tom, that's a lot, in my opinion. I know it's not a lot to these guys that have hundreds of doors, but to a regular investor and people that I've run across day to day, I'd say 70% of them have almost 10 doors, not even 10. So
Right.
that's
And
a lot. That's awesome. You can help people with up to 10 doors.
yes, and we want them to start with one, right? Like you were saying, just get started. So start with one. Great if we've got a plan that we want you to have 20 down the road. We still may start with me, and then when you get to 10, then we shift you somewhere else. But yeah, just get started.
And when you're talking long term too, Tom, long term is relative. Can you do 10-year, 15, 20, and 30-year notes? What length of term notes can you have to offer people?
Absolutely. So 30, 25, 20, 15, and 10 are the fixed terms that we have.
Nice.
Yeah.
Nice. And when they're putting 20% down, if they got a deal on the house, a 10-year note might be the way to go. They might not want to stretch it out over 30 years. It just depends on that person's portfolio, that person's comfort level, and how much of a cash flow they need on the house. If they don't need a big cash flow, they might as well pay down the primary real quick and use that as another asset to possibly refinance in the future. Can people refinance investment properties and buy more investment properties with you, Tom?
Absolutely. And that's when we look at, yeah, yes, you can do that. And you can look at a 1031 on something like that as well. But term is important. And like you were talking about, when that matures is important. So we'll have people call us and say, hey, my kid is 3 years old. I want to do a 15-year term on this investment property because this is essentially my college savings plan. When they turn 18, I want to sell this property, and that's how I'm going to fund their education, their higher education, if they decide to go that route. So
Tom, we got to do a video just on that. That's amazing. I'm going to put in the chat below. Oh, we got a question, Tom. Gabrielle asked about buying out of state. Gabrielle, if you could clarify that with us, if you live out of state and you want to buy in Oklahoma, if you could just clarify that with us a little bit, we'll be able to get you answers on that. Gabrielle, I really appreciate that question. And then here's Tom's direct info. If you want to email him directly, just cite this video that you just watched. Let him know what your exact question is. That's tom.rosser@gatewayloan.com. tom.rosser@gatewayloan.com. Or give him a call when this live video is over. But Tom, wow, what, man, that's our next episode right there. I'm going to email that to both of us right now. And Tom, quit mentioning 1031 exchanges. That has no loan involved. Quit doing that. We want to talk about loans on this call. If they have an asset, let's say a $200,000 house, and they want to get a mortgage loan on that other investment property with you, is that going to be different guidelines than just your standard cash out refi on your primary residence?
No, I mean, you're going to be cashing out 75% of the value of that property. It could be 70 on an investment property. I'll have to look that one up. But no, you can absolutely pull out cash from an investment property and invest in other properties. We have people do that frequently.
That is such a great asset. So if it's a $200,000 property, they've got paid off in full, looking at $75,000 cash out refi. Is that with fees, or is it $75,000 minus 75% minus fees?
75% minus fees.
Okay.
So you
awesome.
I was going to try and do that math. So you take your 150, right? You minus your 5 in fees, you got 145, and you can go buy a few properties. Yes.
Oh, wow. Yeah. Very good info. So guys, put questions in the comments. If we're missing those questions, just put in the comments, hey, read the comments, dummies. That way we read them. Next question. The next thing that comes up, these are 10 frequently asked questions that come up for investment properties. How do I analyze and compare different properties for investment purposes? On the loan side of things, is there anything people need to know when it comes to the loan side of things on that, Tom?
Yeah, it just depends on how we're setting up the loan. Now, if we're going to use projected rental income, then it's important to analyze and compare projected rental income on the properties that you're going to purchase to make sure that the projected rental income is going to cover the mortgage payment if we need that. But I would I would say that's kind of more potentially a question for you, Josh, on analyzing and comparing the different properties. Now, for us, it's do you want to win the cash flow game? Do you want to win the long-term net worth game? Or do you want to win both of them? And we'll try and help you win both of them. Uh, but those two things would go into analyzing and comparing the different properties.
That's all I'd ask you. That's the exact same thing I'd ask you. Do you need cash flow? Do you want long-term appreciation? Do you want less maintenance? Like I'm a proponent for new construction, even though you don't have the cash flow. You're typically gonna maintain value or rise in value, but you won't have any maintenance. And people treat properties to the quality that the property is, I believe. And of course, this is going to be very important when you're qualifying your tenant. But new construction, there's still new construction out there, guys, for 300,000, even some mid 250s if you want to look for them. And taking that and having no maintenance, having a builder warranty covering you, things of that nature, if they allow investors in the neighborhood, that's another thing you want to look at. New construction is a great way to go with investment properties, especially if we're doing what Tom just mentioned, that 15-year plan for the kids' college fund, in my opinion. And then analyzing investment properties, if you're doing cash flow, just go to those weird websites. You guys know what I'm talking about. Not going to mention them on the podcast, but there's two websites out there that are the main ones that will give you exactly what the rental rates are for different areas. And you can run your numbers. Do you want the 1% rule, the 70% rule, or what is it? There's a 50% rule where 50% of the income of the property covers all the costs. That's a no-brainer. If you run across a deal like that, 50% income covers all the costs, the taxes, the insurance, the mortgage, debt service, utilities, et cetera, et cetera. That's a no-brainer deal. It doesn't matter what condition the property is. Location could matter. Location could always matter, but that 50% covering all the expenses, that's a no-brainer deal. So when it comes to investments, it depends on you and it depends on the property. And we just got to look at it on a case-by-case basis. I know that doesn't completely answer the question, but it gives you a start on what the question is asking. It's up to you. Tom, when it comes to the current market conditions and trends for investment properties, do you see anything changing on the mortgage front? Anything that people need to be aware of that might be up and coming?
No, I mean, it's always inventory. It feels like some inventory based, right? So there's a lot of investors. To me, it feels like there's a lot of people that are investors that are getting in the ball game right now because they've seen the appreciation over the last couple of years. So
couple of years is fake. I'm listening, but last couple of years is fake. I'm listening.
But they see it, right? They see that appreciation. They say, hey, I want in that game. I need to buy more properties.
Yeah, and it'll probably hold at the current level. I'm not an economist or an actuary, but the reason I say it might hold at the current level, maybe a little lower, is like you said, there's no inventory. So economics 101, I remember the graph, supply and demand. I remember the graph. When there's no supply, I mean, there's just no supply. So even if your demand was zero or your demand was lower, if there's no supply, prices are going to continue to go up. So the invisible hand theory, when the government and the Fed isn't screwing with the market. So I get it. Market conditions, from what I can tell, I don't see inventory levels rising to keep up with demand. And now that football season is over, people are starting to get their tax refunds back and starting wanting to invest that tax refund into getting a mortgage loan to go buy investment property. Inventory will still probably play a big factor in keeping prices where they're at.
Demand is going to go up.
Yeah. I'm starting to see an uptick in phone calls on all of our sales channels. So that the season is starting to start for the sales agents out there on the real estate side of things.
Yeah.
Well, Tom, man, I just appreciate the heck out of these. I think these are amazing. Bringing these frequently asked mortgage, home loan questions, investment property questions to the people of Oklahoma City and the Oklahoma City metro area. Tom, I know it's on the screen, but what's the best way that people could call you?
Call me 405-751-3800. And Josh, I love being on here. I appreciate you.
Man, Tom. Next week, guys, keep a lookout how to help secure your kids' college education using investment properties. It'll be something along those lines. That's an amazing tool that's really gonna blow people's mind. I can't wait to chat with you more about it next week. I'll start a Google Doc and share it with you, Tom. That way we can start taking notes on it.
Love it. Thank you.
All right. Anything you want to shout out? Anything at all? You said your daughter is making great grades. Shout out to her. Do you take her to Brahms when she does stuff like that?
I don't. I just tell her that's her job to get good grades. But I will say, get started, right? It's what we're talking about. Ask questions, get started, buy some properties.
Yeah. Information without application is nothing. You're going to fail. There's going to be hard times. You're going to make mistakes. But 20, 30 years down the road, you're going to look back and be like, damn, I'm glad I started. Lucille Ball said, the greatest regrets I've ever had are on the things that I never did.
Yeah.
Yeah. She said something like that. She was a smart lady. She said she had a face for radio. That's what she said too. Lucille Ball. Awesome lady. Tom, I'll see you on the next video. Thank you so much for. Oh, wait, Tom, we got a comment.
Yes.
Okay, Tom, Gabrielle lives in California, but she's planning to relocate to Oklahoma. So she'd like to know what the process would be to buy a home. Gabrielle, Tom's info is right there, his email and everything. Shoot him an email, and then he'll loop me in on the chain, and he'll get you the process for the mortgage and all that. And then I'll get you the info sheet on buying a home in Oklahoma. And I'll get you connected with one of our local sales reps here in the Oklahoma City metro area. So, Gabrielle, reach out to Tom. Sorry, Tom. Sorry.
I was going to say, we're doing a ton of that right now. People moving here. We can help.
Yeah, you're going to be in good company when you get here, Gabriella. Thank you so much for watching. Guys, we'll see you on the next video. I don't want to keep Tom past his 30-minute timeline. You got things to do. So thank you so much for everything, Tom.